Hello YouTubers, Alaska Prepper here. Well, this is a video that I would normally reserve for the Alaska Prepper News channel. However, I thought it pertinent enough to show you guys what my thought process is with this quick article I'm going to read to you and some data that I'm going to provide you with. Now, any of you that have any amount of wealth invested in the stock market already knows that the stock market today dropped by over 1,000 points. It ended the day at negative 1,031 points, which is not a good day. However, there are a couple of bigger stories here that I think that are more important, and this is one of them. In videos of the past that I've put up, I've always said that anyone that has wealth invested in the paper market, i.e. in stocks, bonds, brokerage houses, even monies that are deposits in banks, that money is not really yours, and that the more layers of bureaucracy that there are between you and your money, that the harder it is for you to take that money out when it really counts. And for this reason is why I am a big proponent of people always having some cash, and the amount of that would depend on you, but some cash that is readily available, that is not in the system, that you can use in case there is some kind of a credit freeze, meaning that the ATMs won't be working, meaning that the banks won't be giving you back any money because they're closed, meaning that credit cards won't be working, etc. And I just wanted to read this quick article for you because it is a great example of why you should keep a stash of cash out of the system, and a great example that backs up my theory that whatever money you have invested that is not in your possession, that's actually invested in the market, it's not really yours. Fidelity breaks for second time in a week. Countless accounts showing zero balance. Fidelity is a brokerage firm, ladies and gentlemen, so people have their 401ks, their IRAs, investments and things like that. So it's like a big bank that you keep your money in, that you can use that money in that institution to trade or to have them trade for you. If I'm wrong, please correct me, because I'm not an expert at this. It says here, 1 week ago, when stocks were hitting all-time highs, as traders were blissfully ignoring all of the same news that are sending markets crashing today, we reported that online brokerage Fidelity was true to its name and broke, showing zero balances on countless accounts. At the time, we said that while we assume this pesky glitch will be resolved promptly, we should point out that if the market were to ever again suffer a down day, and should investors wish to sell some or all of their holdings, this would be a convenient way to quickly and efficiently prevent that from ever happening. So what they're saying here, ladies and gentlemen, is that on a day like today, where markets took a dive, when people wanted to get into their accounts and sell some of their positions, they were not able to. Now, was this a glitch? This is the second one in 1 week. Was this a glitch? I don't know. But it's very convenient that on a day where the markets are taking a dive, people were not able to sell off what they wanted to, and in turn causing the market to take an even deeper dive. Because if this glitch would not have occurred, a lot of people would have gone in there and sold a lot of their positions, therefore making the market dive and lose even more than what it already did. Little did we know that this hypothesis would be tested just 3 days later, because as of Monday morning, with stocks crashing and the Dow on pace to wipe out all gains for 2020, Fidelity has once again gone dark, with the website barely working and with countless clients eager to put on some hedging trades or at least get the heck out of Dodge, unable to do so because as Fidelity helpfully informs them, they suddenly have zero assets in their possession. And here is one example of one account that said that you have $0 in your possession. Now this person, whoever this may be, was probably wanting to sell off some of their holdings before they became worth less, but were not able to sell because there was a glitch. Now, if all of the people that wanted to sell some of their holdings, ladies and gentlemen, would have been allowed to do so, the market may have tanked even more than 1,031 points. See where I'm getting at? They're using this as a tool to prevent people from using their wealth in the way that they intend to use their wealth. Whether you want to buy or sell, it should be up to you. But if you have your money in an institution that is not beholden to you, then it doesn't matter to them. They don't care whether you want to sell or not. All they have to do is say, hey, there was a glitch. And of course, this is just me theorizing, ladies and gentlemen. It really is. But it's very convenient. It seems very convenient that on a day where the markets are crashing, that you can't sell your holdings, that you can't do anything because there was a glitch. And these are some of the comments here. It says here, looks like Fidelity is trying to protect investors from themselves, or I just lost all my monies already today. It would be great on a day like today if your site worked. So you see, ladies and gentlemen, whether you think so or not, you don't have control of your funds. As long as they are in someone else's hands, you don't have control over them. What if tomorrow the ATM stopped working? Ladies and gentlemen, ask yourselves that question. What if tomorrow the ATM stopped working and your credit cards didn't work? What would you do? That's the kind of question you have to ask yourself so you can prepare accordingly. Hey Fidelity, why does your app and website consistently just crap out during high volatility days? Also, what is the point of a brokerage if you can't trade during high volatility days? Took so long to get an order in. By the time I got an order fill, I was down 10%. So this person was down 10% of their portfolio because they could not get online and get to use their account to place an order because of this glitch. And here's another account with $0. Look at that, at 9:43 a.m., right after the market opened. A few minutes after the market opened and it started tanking, they put everyone's accounts to zero. How does this happen on a day like today? Fidelity, is this intentional to control trading and volatility? My RIA and HRA accounts are gone from the websites. Another one, ladies and gentlemen, what if you have an IRA or HRA account, or what if you even have a savings account or checking account with a whole bunch of money in it that you traded your labor for, and it all of a sudden disappears one day? It doesn't exist, ladies and gentlemen. You have to understand that. Do your own research. It doesn't exist. There are trillions and trillions of dollars floating around the world. I mean, I'm talking about trillions and trillions and trillions of dollars. All right, probably more than $1 quadrillion floating around in the world in digits. And only 1.7 trillion actual physical notes exist. Think about that. There are hundreds of trillions, if not quadrillions. We know for sure hundreds of trillions because the world debt is about $255 trillion. That's the world debt. So there's at least $255 trillion floating around out there. Right? When you take all of the derivatives and add them to the equation, you're talking about quadrillions of dollars. However, only $1.7 trillion exist in physical form. And let's see, the last one right here. Fidelity is down. I'm sure others will be too. Don't panic. Don't panic sell. Bad idea. And then Reno here says, it's the second time this month Fidelity has failed on an important market day. Not good for confidence or the brand. This guy right here, I don't know who this person is, but he's saying, don't panic sell. Bad idea. So I don't know what's going to go on with the market, ladies and gentlemen. I personally think that this can't last forever. All right. There is no value in that market. That market is so overvalued that I don't know how it's still standing. And I don't know what's going to happen tomorrow. I personally think that either we get a dead cat bounce tomorrow, meaning that some people will be buying the dip, trying to buy low, thinking that it's going to go back up because they think that the Federal Reserve will just start pumping and pumping and pumping massive amounts of dollars into the market. Or if that doesn't happen, I think it's going to be another really big down day, because there is no good news whatsoever. Before, the market was running on hope. Oh, we hope that there's going to be a trade deal. Oh, we hope that China's going to lift the tariffs, etc., 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 right? And then before, they were running on hope on this thing that's happening over there in Asia and that it's starting to spread through the world. Oh, they found a cure for it or whatever, and the market went up, you know. And now there's not even any hope for that. Economies are starting to shut down. The supply system is starting to be affected. If this thing goes on into the summer with the way that the supply system is, it's going to be very, very bad for the market, because they won't be able to print themselves out of it. I'll quote Christian from the Ice Age Farmer, who says, "You can print all the money you want, but you can't print food." Same thing with consumables. You can print all the money you want, but if Apple is not making their iPhone, and Tesla is not making their cars, and GM or Hyundai or whatever, if they're not making their product to sell, money, printing money is not going to make those products just appear out of nowhere. They have to actually be made. All right, they have to actually be brought into creation by someone who actually made it with labor and capital. I wanted to show you one last thing. This is pretty important right here. This here is the Federal Reserve's balance sheet. And you will take a look and see this. Now, try to stick with me on this, ladies and gentlemen, all right? Because for someone who doesn't really get this, it may be a little difficult. But this is the Federal Reserve's balance sheet. This is how much assets, how many assets the Federal Reserve has in their books, meaning things that they bought with printed money. Okay, that is how much they have in their books. Let's see, back in August of 2019, so roughly 8 months ago, they had $3,773,000,000 worth of assets. Things that they printed money for, all right? They printed money out of thin air and they bought, be it mortgage-backed securities, be it treasuries, be it bonds, whatever, right? They printed this money out of thin air. They bought it from the banks so that the banks could be made whole, and that money is out there circulating in the economy. All right. Now, take it forward to today. All right. February 2020. Now they have $4.173 trillion. You're talking about roughly $400 billion of money that the Fed has created out of nothing and bought stuff with. But the question is this: what is it that the Fed has been buying? What have they been buying? Well, I went ahead and took a look at the bond market, and if you'll notice, just here in the last month, these are the bond yields, all right? Whenever, in the, decades ago, I remember I even got one when I graduated high school. I got a bond. You remember those bonds that someone would give you, and it looked like a check from the federal government, and it said $50 or $100 or whatever it was. And it said, yeah, this will mature in 10 years. In 10 years, you can cash it in for whatever interest rate. And at that time, 20, 30 years ago, it was actually a decent interest rate, right? That's what this represents. This represents the interest that you would yield if you purchase a 3-month bond. So a 3-month bond, you would yield 1.53% interest. Go all the way to a 30-year bond, and you would yield 1.83% interest. Now, the lower the interest rate means that the more of these bonds that are being bought, Okay, the more of these bonds that are being bought, the lower the interest rate. All right, think about it, because if a lot of people want to buy them, then why would the seller offer a higher interest rate when he's got a lot of customers already? But my question is this: who would want to buy a 30-year bond at 1.83% interest rate when the Federal Reserve admits that it wants an inflation rate of 2% or above? So inflation rate is the rate at which your dollars are devalued every year. Why would I want to buy a 30-year bond at 1.83% when I know that the Federal Reserve's inflation target is 2% or above? Which means that I'm buying a 30-year bond knowing that I am going to lose money, knowing that I am going to lose purchasing power, guaranteed. So who is buying these? Look at this. This one's 1.53, 1.47, 1.34. A 2-year bond is 1.25. A 5-year bond is 1.21. So the Fed is telling us, yes, we want to have a target of inflation of 2% or above. But here these bonds are selling at 1.21%. The 10-year bond, 1.37%. It makes no sense that anyone in their right mind, that any large organization, that any large corporation, that any large bank would be purchasing these bonds. So who's purchasing these bonds? It makes you wonder why the Federal Reserve's balance sheet has been going up so much. The Federal Reserve balance sheet is just going up and up and up. And the Federal Reserve is the lender of last resort. So who else would be buying this crap? That's what this is, crap. And why do they do these, ladies and gentlemen? Why do they do this? They do this for 2 reasons. Number 1, because no one else is buying them. And number 2, because if no one else is buying them, then they have only 1 or 2 other places, or 3 other places where they can put their money. The stock market. Some people are putting their money in gold and silver. As you can see over here, gold made it all the way up to $16.90 today, $1,690, and silver made it up to $18.60, which is nothing. Anybody that doesn't have silver out there, if I didn't have any silver or had a little bit of silver and I had any excess liquidity that I wanted to put into something that would preserve my wealth, I'd be all in on silver. Gold is great, but I think silver is much better. The most undervalued metal in the history of the world, I believe. So this is where some of the money's going. That's not going into the bonds, and that's not going into the stock market. And I will say it, some of the money is also going into cryptocurrencies. So that's my 2 points, ladies and gentlemen. I just wanted to go ahead and make you aware of this and allow you to see how it is that the Federal Reserve, all right, in cahoots with the federal government, is doing something that 20, 30 years from now, we will look back and see and realize what they were doing. What they are doing is they are eliminating the middle class. They are getting rid of the middle class so that there's only 2 classes left: the elite and the people that have nothing. Because you know that all of this money that's being lost in the stock market, most of these monies are monies that are being invested on your behalf by pension funds. So if you have a pension guarantee, or if you have a pension from some company and you find out that your pension is not doing very well, it's because they're losing your money in the stock market. It is being transferred from your hands to the hands of the people that are getting out. And most of those people that are getting out are the people that are in the top 1%, are the CEOs, are the multi-billionaires or multi-millionaires as well. These people have been getting out in droves. Just in the last 2 or 3 weeks, the CEO of Amazon has sold, I think, in excess of $6 billion worth of shares. So I'll leave it at that, ladies and gentlemen. I don't want to carry on too long on this. I think you guys got the message. I just hope that if any of you are invested in the stock market, IRA, etc., that you're doing your due diligence and that you do what you feel is best for yourselves and your families. Having said that, thank you very much for joining in. I truly do appreciate it. Believe it or not, ladies and gentlemen, I have a review video to put out, and guess what it is? Yes, it is. It's a flashlight, and it's pretty awesome. So I'll be putting out that video here in the next day or two. Thank you very much for joining in. I hope you got something out of this. Please do your own research, because only you can determine what's the best thing for you to do. So remember to be good to each other. When good people do good things happen. Remember to reach one, teach one, and repeat. If we all did this, the world would be a better place, and you know that it will be a better place. Many blessings to all of you and your families. This is Alaska Prepper, and I'm out.